Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 279 on July 14, 2023. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on HUT8 Mining Corporation, Quantamscape Corporation, and Beyond Meat Inc. And we discussed three new trades on Rocket Lab USA, NIO Inc., and Robinhood Markets. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. And for anyone that wants to learn how to trade options, I teach students how to trade, not just study option theory, using a combination of videos and live coaching calls. So if you're ready to take your trading to the next level or get over any plateau you have, send me an email and let's schedule a phone call. The equity markets had another strong week-over-week gain. The Dow Jones Industrial Average gained 774 points, closing at 34,509 points. The S&P 500 index had a 106-point increase, ending the week at 4,505 points. And now it's time for the topic of the week. The topic of the week this week is trade management. Now, I used to think that trading was all about getting things right the first time around. I thought I needed the perfect entry and exit points. My perspective since then has changed a little bit. Sometimes an entry point is nothing more than an entry point or a first trade. It's kind of like a first negotiation. And the main difference between how I trade now or how I view trading versus how I used to view trading is in the specific adjustments that I make. I figured that my entry points are slightly better than 50 or 55% probability of winning. However, my ability to adjust trades and manage the trade after that initial entry increases my winning percentage significantly. It is possible to turn a winning trade into a losing trade, and that really sucks sometimes. It's also possible to turn a losing trade into a winning trade. Sometimes managing the trade means altering the trade altogether. Sometimes it means knowing when to close a trade early to minimize a loss or even to capture a profit before expiration. Either way, trade management plays a significant role in having a successful trading style. The better you understand options, the higher the likelihood of you being consistently profitable. Discussing adjustments and helping to improve trade management is a large part of the coaching process when I work with students. We have some fun on the phone calls when they mention trades, and then I turn around and say, okay, if this goes against you, what will you do? How will you get out of it? If this works, what will you do? How will you make more money from it? If you're even slightly considering ways to get better as a trader, send me an email and we can have a call sometime soon. And honestly, if you just have a simple question on your trades or on options, reach out. I've answered at this point hundreds and hundreds of questions for people. I know that it's taken me 20 years to get where I am, and I'd love to help you shorten that learning curve a little bit and just answer some of the more simple questions or questions that are challenging for you, but they might be more simple for me. So that's it for the topic of the week. Let's go ahead and get into the trade review from last week's trades. We'll start off with the covered call on HUT8 Mining Corporation, symbol H as in hotel, U as in uniform, T as in tango. At the time, the stock was trading for $3.80 per share. I looked at buying stock and selling the July 4 call at 20 cents, which could give us a maximum return of 10.53% in 2 weeks. Shares of HUT8 Mining ended the week 36 cents higher, closing at $4.16 per share. The call option we sold gained 18 cents, leaving us with a net profit of 18 cents if we were to close the trade out immediately. Of course, if we hold the trade one more week with stock above $4 per share, we're primed to capture our full expected return of 10.53%. So no adjustments are needed on this trade, especially with 1 week to go. Expiration is next Friday, July 21st. So keep track of stock for 5 more days to lock in a profit. Next up, we have our credit spread on Quantamscape Corporation, symbol Q as in Quebec, S as in Sierra. At the time, the stock was trading for $8.78 per share. I looked at selling the July 8 put spread at 17 cents, which could give us a maximum possible loss of 33 cents per spread. Well, shares of Quantamscape grew $1.10 per share, ending the week at $9.88 per share. The out-of-the-money put spread that we sold is now even further out of the money, which is great. We could buy the spread back to lock in a profit right off the bat of 13 cents. That's actually 76% of our expected profit, so no reason to sneeze at closing out the trade early. Now, with stock well above our $8.50 upper strike, I'm fully expecting to capture the full profit of 17 cents from selling the spread. So this trade worked out as well. No adjustments are needed. Only 5 more days left until expiration. And our final trade on the week was a debit spread on Beyond Meat Inc., symbol B as in Bravo, Y as in Yankee, N as in November, D as in Delta. At the time, the stock was trading for $14.78 per share. I looked at buying the July 14 half call spread for 32 cents, which could give us a maximum gain of 18 cents, or that's 56.25% return in 2 weeks. Well, shares of Beyond Meat grew $2.26, ending the week at $17.04 per share. The in-the-money call spread that we bought is still in the money. The spread is $2.50 in the money at this point, giving us a strong likelihood of capturing that full expected return on the trade of 56.25% return on capital. Now, you can alter the trade to capture a larger profit by extending the spread beyond 50 cents wide. Of course, with no adjustments needed, this trade looks like a winner with 1 week left before expiration. So no adjustments are needed. Nice trade. It's just a matter of if you want to adjust the trade to try to make a little bit more money on it over this next week. So that's it for the trade review for this week. I'm always happy when I go 3 for 3, but that does lead to a much shorter show. So let me apologize to you guys in advance. Like I said, if you have any questions, definitely reach out to me. I'm going to keep on going. So July expiration for monthly options will be in a week on July 21st. All new trades for the next few shows will use the August 18th expiration for monthly options in August. Now, we'll start off with our new trades. Let's go ahead and dive in with the covered call. I'm looking at Rocket Lab USA, symbol R as in Romeo, K as in Kilo, L as in Lima, B as in Bravo. The stock ended the week at $6.32 per share. I'm looking at buying stock and selling the August 7 call at 30 cents, looking at an expected return of 15.51% in 5 weeks. So you enter this trade by buying stock for $6.32 and selling the August 7 call at 30 cents. This trade makes the most money if stock prices finish above $7 per share. The break-even price on this trade is $6.02 per share, and in real terms, the stock purchase will require $632, and you'll collect $30 for selling the option. Next up, we have a credit spread on NIO or NIO Inc., symbol N as in November, I as in India, O as in Oscar. The stock ended the week at $10.54 per share. I'm looking at selling the August 10-9 put spread at 31 cents, which could give us a maximum possible loss of 69 cents per spread. So you enter this trade by selling the August 10 put at 59 cents and concurrently buying the August 9 put for 28 cents. This is a credit spread because we're selling the spread, and this trade makes the most money if stock prices expire above $10 per share. The break-even price on this trade is $9.69 per share, and in real terms, you'll collect $31 per spread that you sell and have $69 at risk. Then our final trade on the week is a debit spread looking at Robinhood Markets Inc., symbol H as in Hotel, O as in Oscar, O as in Oscar, D as in Delta. The stock ended the week at $12.38 per share. I'm looking at buying the August 11 12 call spread for 60 cents, which could give us a maximum gain of 40 cents, or that's a 66.67% return in 5 weeks. Now you enter this trade by buying the August 11 call for $1.82 and concurrently selling the August 12 call at $1.22. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $12 per share. The break-even price for this trade is $11.60 per share, and in real terms, you'll pay $60 to enter the spread, and your maximum gain is $40 per spread. So that's it for this week's show. I've had some great questions over the last couple weeks that are going to be turned into topics of the week. So thank you to all of the people that have reached out to me. I've had a couple phone calls too. Reloading as far as adding some new coaching clients and thinking through a couple of different concepts, possibly even, get this, a reality TV show. But that's for another time, another topic. My mind is all over the place. I love summertime. I live in Texas. It's blazing hot, and I can't even cool off in my pool. My pool feels like bath water right now. But hey, I'm happy. I have a birthday coming up in a few weeks as well. So, all in, life is good. I hope that everyone listening to this podcast is also enjoying summer, whether you live in sweltering heat or if you are someplace cooler like Colorado right now. I hope you're having a wonderful summer. I hope you are using this time period to get better. Summertime is a great period for option trading. It's low volume. It's typically not as volatile, even though we've had some volatile times, right? I think the VIX is somewhere down around, there you go. The VIX is down around $13, a little over $13. So this is a great period to just get a sense of what it feels like to trade options. So, if you're starting out, if you can open an account and you can afford, even a $30 spread, right? Like I sold today, the credit spread that I sold, you'd collect $31. Now, if you will end up needing that other $69, your brokerage will hold on to that just in margin for when you do that trade. But there are some shorter term 50-cent wide spreads that you could get into that you'll end up buying a spread, just like this past week. You'll end up buying a spread for, less than $35 per spread. I mean, definitely learn, put your money at risk, and do it smart. Don't do it, haphazardly. The trades that I present here on the show, especially the spreads, the credit and the debit spreads, they are done methodically. I've chosen them for a reason, and I'd love to teach you how to choose them. But even if you are not prepared to get some coaching, get used to actually entering trades and understanding where you make money, where you lose money, so your break-even points, and then how you exit and how you adjust the trade. That's it. That's trading. I've been doing it for 20 plus years. If you're starting out in year one, just keep on walking, right? One foot in front of the other, because one day you're going to look up and you'll have 20 years of experience too. So I love this journey. Thank you guys so much for listening and being on the journey with me. I hope you guys know that I'm sincere when I wish you happy trading. I want everyone to have an amazing week. So go for it. Have a great weekend. And as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.